Hello everybody and welcome to the Cyclical Investors Club YouTube channel. My name is Corey Kramer. Today we're going to be taking a look at Gilead stock, ticker GILD. This one came in by request down in the comment section of one of my other videos, and I feel a little guilty because I've been bumping a lot of other tickers up in front of it because I just had more people requesting them. And also, Gilead isn't a perfect fit for like the style of investing that I do. So sometimes I don't feel like I'm quite as useful on these, but I still think I can offer some insight. So I'm going to share my thoughts on it in this video. If you have a request you would like me to analyze on the channel, even if it's something that doesn't perfectly fit what I do, I'll still kind of share my thoughts on it and why it doesn't fit or why it's difficult or whatever. Just put those requests down in the comments. I'll get them on the whiteboard behind me, the tickers, and eventually I'll make a video. If it's a stock that's in the S&P 500 like Gilead, I will post those on YouTube for free. The rest will be on Patreon. There's a free tier level on Patreon now, which I'm going to be adding more things to over the next several months. So consider just kind of joining over there and give me a little bit more time to put some things together, and we'll be doing some cool stuff over there as well. Also, if you join the $5 Patreon tier, you can get a discount to the full Cyclical Investors Club service over on Seeking Alpha. Okay, those links will be down in the description. So, getting into Gilead, as always, this is not individual investment advice. This is just how I analyze stocks. So, story time. I learned an important lesson with Gilead, so it actually is worth me talking about a little bit because perhaps other people can learn a similar lesson. So I bought Gilead stock about a decade ago, right during this period here somewhere. Like, we'll call it 2014, late 2014, maybe early 2015. And as you can see, at the time their earnings were skyrocketing, and the stock price was it followed for a while, or actually anticipated this a year or so in advance. It followed for a while around the time I bought it, and then it kind of stagnated for a while, and it eventually fell down. We can see that they had these two gigantic earnings years, and then, well, compared to here, their earnings have always remained higher than what they were back in 2013, but they didn't maintain this gigantic jump that they saw. So let's say if I had I don't remember exactly when I bought it, but let's just say I bought it at $100. That actually might have been around where I bought it, and I held through today. I would have earned nothing, basically. Wouldn't have really lost too much, with the dividend, but basically would have gone nowhere for the past decade. I did sell it at some point in here. I don't remember. I think I just lost maybe a little bit on it. I don't remember exactly, but the main lesson that I learned was when you're using an earnings-based analysis for a drug company, you really have to take into account patents and how long the drugs will last, the total addressable market, and things like that, rather than just looking at, whatever this earnings growth rate is, like 1,000% or something. I wasn't assuming that it would. 300% earnings growth and a 12 PE seemed pretty cheap. Even if it was just a normal earnings growth rate, that would have been pretty cheap, it seemed to me back at the time. But the way it worked was Gilead basically developed these hepatitis. I'm not sure if you would call them drugs or vaccines. I think they were technically probably a type of like vaccine treatment for viral hepatitis that actually basically cured a couple different types of hepatitis. So really fantastic breakthrough. I always think I don't get too much into politics on this channel, but whenever I hear like Elizabeth Warren or Bernie Sanders, especially back during this time, complaining about Gilead in particular and singling them out, I just thought it was ridiculous because for a long time, politicians and people would perhaps rightfully complain in the U.S. This is mostly a U.S. thing because our healthcare system is weird. We're very inventive, but also very expensive. The complaint was always, these drug companies, they just only develop things that will just keep people having to buy their drug. They just treat things, they don't cure things, was the big complaint. Pretty legitimate complaint. But then Gilead comes out and effectively cures hepatitis, like a couple forms of hepatitis. and then they still get slammed for it, right? So I never thought that was very fair. Um, and investors paid the price for them curing hepatitis, basically. So if you bought when I did, if you bought down here, you're still doing all right. I mean, if you even if you held the whole time, you're getting nearly a 13% CAGR. So that's okay for those folks. But you can see that earnings had a big jump during when people initially got cured, but once they got cured, then they didn't need it anymore. And over time, when everybody gets cured of the disease, then the market diminishes and Gilead doesn't make as much money. And you can see that in their earnings here. So that's effectively what happened, and then they just have kind of leveled off at this level where they're at now. So that's kind of the story there. Really a good story for civilization and humankind. Not a fantastic story for investors since 2013 or so. But so now the question is, well, what does Gilead look like now? I went and looked at their annual report really quick. I hadn't looked at them for quite a long time. And it looked like they have HIV drugs, they still have the hepatitis stuff, and it looked like they had some cancer things that they were developing and actually already have on the market. I didn't look into how much each brings in, but you can see that their earnings have been pretty steady, but with a little bit of a downturn this past year. So, the way I would approach Gilead stock right now is they're kind of like lottery tickets a little bit. If we go to, this is a time people sometimes ask me why I don't use the normal, let me see if I can find it, the normal PE, but if you get the right time frame, this can be helpful because this shows you, okay, since hepatitis cures leveled off, basically, they have HIV. And again, the more successful you are at stopping HIV, the lower your sales are going to be. So Gilead sort of suffered because they're so good at what they have been able to develop in terms of investing. So the mean PE during this time, so if you look at it and you see, the PE is 10, right? Well, the average PE, that looks like it's just barely below the average. So if we go down here, 10.24 has been the average. Let me actually shorten this and make sure it's pulling the right time frame. Yeah, 10.24. Okay. So that's normal. So basically it's trading pretty much at the normal PE that it's traded at during this period of time, which is probably the most relevant period of time. So I am the type of person that is willing to accept the things that I know that I cannot predict very well. And I know that I cannot predict better than the market what odds Gilead has of developing another new blockbuster drug. So the approach I take with Gilead's is like a biotech / pharma, I would say. Kind of depends on how you want to categorize it. Is if we assume that what they have going on here is pretty stable and they have enough variety of things, of drugs that are bringing in, this type of income that they have right now. I mean, they have kind of three big areas. I don't know if that's kind of the minimum I would want to kind of make an investment like this. Especially every now and then I'll buy like a smaller biotech, and I like to really see like three different forms of revenue coming in. Just because they can be so temperamental in terms of you don't want everything riding as they did for just a little while on a couple different drugs. You really want it a steady. When I invest in like a big pharma, like I own Merck or whatever, and I bought it at a good price and it's done well for me. But the idea was it was cheap, and that I'm just guessing on maybe they'll come up with something that will do well in the future. And then Keytruda started being used for everything, and so I got lucky, basically. Lucky, but I paid a price where I just got the odds in my favor. So the question is, is this a price where you can do the same thing with Gilead if they can develop something down the road that's popular and then they make a lot of money on? And so I would say it's probably average right now. This is probably a useful time for the normal PE. And if you can see it got down to like an 8 down here. Just generically speaking, without trying to make a prediction about, what's falling off patents, what's in stage 2 and 3 development and so forth, or phase 2 and 3. To me, that 8 PE level looks like a pretty good entry point, like close to it. You had a couple opportunities almost at an 8. So, and then if you wanted to, so if you had, cash, if you had a lot of extra cash and you wanted to put it someplace and just say, okay, maybe in 2 or 3 years these guys have a hit. And in the meantime, they're going to pay you a dividend. I don't know what it is yet. They're going to pay you 4.5%, right? That's pretty good. I mean, treasuries give you a little like another 100 basis points or something, but you don't get that potential upside if something good happens, right? So if your cash is just sitting around not doing anything and you have a bunch of it and you're like, I'm going to place a reasonable bet here on Gilead. Plus, if you bought it 10% lower, that yield, you could maybe get that up closer to 5%, right? So I'm not sure exactly if it will tell me the yield here when it was cheap, but yeah, you get that yield up around 5%. They pay you to wait, and then maybe you get lucky. Now the downside is maybe all their drugs like come off patent and competition comes and they never develop anything. So that's the risk basically. But for a small position, I mean, I think it's fine. I do this sometimes. I don't own Gilead anymore. But if somebody, I don't track it, so I probably wouldn't even notice. But if it got down to 8 PE, I might put a little money in there. So that's just kind of, hopefully that kind of frames things. I don't have like a great way that I feel like I can value biotech stocks any better than the people who specialize in biotech stocks. So I'm pretty humble when it comes about them. But I think Gilead was the last big biotech mistake like that I made. I don't think I've really lost any. Bristol Myers hasn't done much, but I haven't like had any major losses in these. So usually if you're just kind of safe about it, you find something that has a diversified enough portfolio and you buy it when it's cheap and you wait, then if you buy a basket of them, some of them are going to probably do pretty well over time. And so that's the approach that I take with these. Hopefully you found that helpful. If not, sorry. If you did, hit the subscribe button, and I'll see everybody later. Bye.